You're listening to the Promise of Place podcast, the official podcast of Avenue CDC. We're here to explore ideas, stories, and solutions for shaping housing, affordability, and community development in Houston. Each episode is going to bring you practical guidance, expert interviews, and real conversations with community partners who make our mission thrive. At Avenue, our mission is simple: strengthen neighborhoods, create opportunity, and expand access to safe, affordable housing for every family. I'm your host, Michael Carpenter. Thanks for joining us today. Let's go ahead and jump into today's conversation with Marla Davis with Trustmark Bank.
Hi.
Introduce yourself a little bit. Tell us a bit about who you are, your background, and then we'll get into more credit conversation.
Okay. Well, I'm Marla Davis. I'm with Trustmark Bank. Mm-hmm. I've been there now for about going into my 5th year now. Okay. But I've been in the mortgage business for about 33 years. Mm-hmm. And I definitely enjoy the community lending side mm-hmm. of things. I was actually doing community lending before I knew what community lending is. Okay. It's like just because of my personality, people that kind of just needed some assistance, mm-hmm. that's who was drawn to me. Okay. And then I learned it's a whole title.
Yeah,
So,
absolutely.
Yeah, so I've been doing this for a long time now, and I definitely enjoy it.
Yeah, so mm-hmm. why, because of your experience, obviously friends and family or whoever the community was being drawn to you, right? Mm-hmm. Was there any particular moment where you recognized that you really had to do something about it, right? Because obviously you could have been like, hey, I'm going to pass you on to somebody else. Like what made you want to say, okay, I'm going to take this on and learn how to help people through this?
So when I saw that I had a knack for helping potential home buyers kind of explain situations, mm-hmm. I've been there. Mm-hmm. So it made a big difference to have been there, right? Mm-hmm. That makes a big difference. And so when I started to listen to different people's story and I saw me in them, mm-hmm. and I felt like you still deserve to be a homeowner. Yeah. You still deserve to have financial security. Yeah. You still deserve to have to be able to pass something down to your children if that's what you want to do.
Right.
That's when I decided, you know what? This is where I am. I didn't know this is where I am, mm-hmm. but this is where I want to be. And I never have tried to move out of it.
Yeah, I love that.
I never have.
And what I appreciate about you on that is because you've been doing it and you've been stable in that role for so long, I think you've probably seen a lot of ebbs and flows in the real estate market and the economy, and so you've probably seen the good, the bad, and the ugly.
Yeah.
So
no, I've been there.
Our current market
mm-hmm.
probably doesn't scare you, right?
Right.
You know how to get solutions.
Right.
So let's talk about understanding our credit. What does credit really mean for the average person when it comes to housing affordability? Even on the rental side, just talk about in general, like when it comes to living in the place that you live, how does your credit impact your options on that?
Right. So I'm real big on helping people understand their credit, mm-hmm. especially when we need to kind of dive into it. Mm-hmm. I get a lot of applications, unfortunately, mm-hmm. Where they're going to need some help. Okay. So I'm not going to be able to help them with just saying this is not the time, mm-hmm. right? Maybe later, clear up your credit and come back and see me. Yeah. So I don't do that. I don't send them down the road. I help them understand their credit, help them understand I examine their credit reports and I help them understand how they got there, mm-hmm. What they should do going forward to better their credit mm-hmm. situation. And then I'm there to help them. If we need to call in a third party or whatever, mm-hmm. Then I'm willing to do that. I do have partners. I don't endorse. Mm-hmm. I'm being honest. I don't endorse credit repair, mm-hmm. but I do have people that I would have them engage with.
What are you seeing as some of the common problems that people are getting into that's hurting their credit? I don't know the stat, but I know in the past couple years, Americans have been using credit at higher rates than normal. Right. Are people using credit for everyday expenses? Is this people just not being financially disciplined and buying the TVs and the cars and, mm-hmm. and things they can't afford? Or what are you seeing as kind of maybe a common thread?
So you used a word that's great, mm-hmm. Discipline. Mm-hmm. And I think that when we first start getting credit, we don't know about discipline, and we don't even understand why it's important to be disciplined. Mm-hmm. Credit is not something that you live off. Right? Mm-hmm. Credit is something that should be mentally, I always say, used for emergencies. Mm-hmm. And so if you can use it for emergencies and then be able to afford to use credit and actually pay it off, mm-hmm. that's how I say. That's how I say to use credit. Okay. We are going to have emergencies. Yeah. And so when I teach understanding your credit, I tell them that try not to go, stay at 30% of that credit limit, be able to make auto debit payments.
All payments, yeah. Okay.
And if you cannot make auto debit payments that it's going to automatically come out of your checking account, then I would say you're over your credit.
Okay.
Right? You're overextended.
Gotcha.
Right? So it's just important for us to kind of understand that it's not something to live off of. It's not something that we want to just kind of use willy-nilly. And when we first get credit, we are going to just use it without even having a purpose.
Gotcha.
And so my my takeaway is to use credit sparingly and try and use it for emergencies.
Yeah, and it's so funny that that you say that, using it for emergencies, because my experience with credit, I grew up in, my parents were big Dave Ramsey fans, right? So I had got introduced to Financial Peace University and all stuff at like probably middle school, right?
Yeah.
So to me, credit cards were like the worst thing you could do, right? And right out of college, working 2 jobs, I was just trying to make it, right? And I got into some scary situations where I was like, I was selling stuff at pawn shops, and that honestly would have been a great time for me to actually use credit. Because I put myself in situations where I'm like, hey, I had a job, I could have paid it off, but like I was like, oh no, I can't get a credit card, right? And so I was like, really struggling and stuff. And so it's kind of funny that I probably could have, if I used it the right way and I had financial discipline, I just was struggling, right? And so I think those are things, as long as we understand how to use it and when to use it, I think you can use it as a resource.
Absolutely.
So from your perspective, it just sounds like there's not the education on how to use it.
Right.
Okay.
We do need education kind of going in.
Yeah.
At a younger age.
Okay, younger age.
And we can go into that when we get to that. But
but let's talk about it right now, because one thing that we're going to talk about later, and we might as well just go there now, is Home Fest, right? Which is a home resource fair that we do here at Avenue that really gives prospective homeowners and current homeowners the opportunity to get connected with resources, right? So whether that's banks, insurance companies, realtors, the different city and county programs, all the resources they're going to need, right? And part of that's been the thread that's been coming up is that it's for the whole family, right? And so when we introduce whole family units to financial education, it's not just the parents, right? It's like the whole family unit. Even when we talk about, the big word everybody likes to say is, legacy or generational wealth, right? But I don't think we really understand that generational means multiple generations.
Right.
So it can't just be one person in the family that has that knowledge, has to get passed down. So how we introduce the younger generation to these concepts, even if it isn't applied to them, they're at least kind of getting started. So kind of talk about that. Kind of how do you think we can introduce these topics to kids who at some ages maybe don't care?
Right.
You know what I mean?
They don't
necessarily
know to
understand.
Care.
They don't know to care. They don't even know the situations. Although I do think that more and more kids are having to, because of the times that we're in, I think more and more kids are having to work early. I was talking to a friend the other day, and she told me, she's from Florida, and in high school they get out of school at like 2:00 because all the kids got to go to work, right? And you're thinking about, well, why are you working at 15? Well, like, we're in an economy where, hey, you got to work, either to support your family unit, to support yourself, whatever that is. So talk about that.
Pay that cell phone bill.
Yeah, your cell phone bill.
Right.
I mean, they're all paying for the brand new iPhones, and all the things. So
So for me, and it's very personal to me, because I've been very much about credit. I have 3 kids, and they all have, like, I'm lying, 2 of them have really good credit. My first, I'm sorry, I failed. I failed. I'm sorry, right?
Yeah.
But it was just very important to me, since especially being in the business. And so when, like you said, generational is not just one person. It's too much. It's too hard. So to be able to teach all of your family and speak to your family as a group and kind of do things as a group, right? Because maybe me and my mom, we might already understand, right? But my kids, I'm gonna tell you, a mistake that I made is I just kind of grabbed them up. I started putting them on my credit cards to build up their credit score. And I didn't explain, hence my oldest. But then I realized what I failed. I didn't do enough explaining. I'm saying, here I am, I'm out here, and I explain and I teach classes, but I didn't do that with my own.
Yeah.
That's a big mistake I made.
Yeah.
And so we definitely need to take the time and slow it down, because in school everything is electronic, everything is quick, fast paced moving, keep it moving, right? But we need to slow down. We need to know what a balance is, know what an interest rate is, know why an interest rate is important. These are the kind of things that we have to have conversations about, because unfortunately, as family, we are the ones who need to talk about this. School, they're on some other stuff, right? So just inside the family unit is where these conversations need to be had.
Yeah, absolutely.
Yeah, definitely.
Yeah. Do you have any? I love that you shared that. Thanks for your transparency on your own personal life, right? Recognizing, and I think we all have to look in the mirror and be like, hey, how are we, educating our families and what is important to us.
Right.
I think ultimately it comes down to we educate ourselves on what's important, right, and what we value, right? And so if college or NFL sports is important to you like it is to me, hey, I know all the stats and all the players and all the things. I know everything. I can tell you all about NIL deals and all the things, right? But are we also then doing that same thing when it comes to, our building our credit and understanding affordability? So are there any other misconceptions that you think people have about their credit score?
Right. So yeah, absolutely. So for one thing, people don't want their credit ran. They're like, is this a soft? They don't even know what a soft pull is, right? So again, that education, that conversation, and that slowing it down. So it's no problem having your credit ran, and a soft pull is just one credit bureau. And so most of the time, me being in the mortgage business, people will come and say, wait a minute, my score was this. But what they don't understand is that there's 3 credit bureaus. Okay? There are 3 credit bureaus, and they all serve a purpose. And so with those 3 credit bureaus, when you go into bigger financing, like mortgages, right, then they're going to pull all 3. And so I think that it's important early on to know about those 3, that TransUnion, that Equifax, and that TRW, right? And so we usually, again, we start off with the bank credit card, with the store credit card, and then the major credit card, right? And so it's just important for us to know the difference in how a financial institution, such as a bank, for a mortgage will read that, right? And so I
think knowing how you're viewed, how
on
they're
paper.
looking at you. Yeah, exactly. I think that's really important to understand, because we a lot of times think about it from our situation. Well, this is what I had going on, and this is why I missed the payment because I had, you know, we can come up with all the excuses on our end, right? Or maybe not excuses, but just things that happen in life. But then understanding, okay, how are my choices or my things being viewed outside of this? I think that's really important. So, I mean, what are some of the things people should start doing to kind of pay attention to their credit, right? I mean, is that how many times can you check your credit a year? Do you think Credit Karma and a lot of the bank apps have those kind of, you think, are those helpful? Like, what are things people should be doing to kind of monitor?
So it's important, I believe, to check your credit report at least once a year.
Okay.
You have the right to do that. Again, some people don't even know that they do have the right to do that. There are different various websites, not Credit Karma so much, that can keep up with your balances. That even from experience.
Okay.
It's good for balances, but it doesn't line up very closely with your credit score. But when you look, once you have established credit, I'm kind of jumping. Once you have established credit and you look at you're able to look at your credit, even your score, with the people that you hold credit with. So it's going to be more likely to be a little closer to what your score is. Say a major credit card, maybe say Discover, say a MasterCard, and they say check what your score is now. That's going to be closer to what that score is, but you need to know who they're looking at, because they're only looking at one bureau. Right?
Gotcha.
And so when you go to when you're interested in even a car dealership, they're still looking at one credit bureau.
Okay.
And so really and truly, the mortgage merged credit report, that's going to pull all 3 of them.
On that point, is there a difference between your FICO score and your credit score? Because I always see that in my little Credit Karma app that I use. So I'm like just curious, what is the difference there? How much does that impact anything?
Right. So your FICO score is going to be the mid score. That's going to be, in any situation, if they're going to use a FICO score, it's going to be the mid score. It used to be thought to be the 3 averaged, but it isn't. It's the middle score. Okay, and that's the one they're going to use. Now, if you only have 2 scores for any reason, they're going to use the lowest score, and so that's going to be considered your FICO score, because their FICO score is actually going to be the score that they're using to judge, to say what you deserve, how much you deserve, why you deserve it. That's what they're going to use, and so that is pretty much what the FICO score is. It's going to be the score that's actually being used to say to a lender, be it a bank, be it a mortgage company, what they're going to qualify you on.
Okay, gotcha. Okay, that's really helpful. Thank you. So in terms of Trustmark, your bank, how do you guys approach financial literacy when it comes to clients and community? Do you guys have a philosophy that you go through? What is kind of what are some of the resources or products that you guys have to kind of walk people through this process?
Well, you kind of mentioned it. We do want people to have financial literacy. We want them to understand what the process is. So again, I have to say that that's why we don't send them down the road if they don't qualify. We say it not now, and I'm here to show you, to help you get to now, to that now. And it's very gratifying to be able to do that, right? It takes a little bit more time, but that's why a community lending specialist is different from a mortgage lending specialist. So as a community lending specialist, we get paid to slow down and take that time, to spend that time with a buyer and explain to them their credit, help them understand how they got there based on what we're seeing. And again, like you said, they may have reasons that they feel, but we have to break that down and say, okay, I hear you and I feel you, but this is what we need to do now, right? Because a lot of times people feel like, oh, I'm not paying that. I co-signed for, they didn't pay it, I'm not paying that. And I say, okay, well, this is how this will affect you, right? And now you want to pay closer attention to what you allow to happen in your credit life. Because they want to tell me now what they're not going to do. And I'm like, absolutely okay. But let me explain to you now how that's going to affect you, right? How it's going to affect you when you have a credit card with $1,000 balance and you use it up to $800, right? I explain that to them of what effect that takes, and it's a negative effect, right? And and how much more money they're going to pay when the bank tells them that their balance is $800 and they only need $20 as a payment. How much longer it's going to take. So I always try to help them and educate them and explain to them why it's important. Make that $20 payment, but when you get paid again, try and make another 20 or maybe even a 40. Because otherwise, it's a thing called interest, and based on that interest, you can be paying that little $800 forever, and I'll show them, right, how much they're going to end up paying, which is double.
So do you think that people don't have the money to address these kind of situations, or again, is it back to what we talked about earlier, where they just don't have the education or the discipline to do that?
Definitely don't have the education. I feel like they have the money. They were living before they knew credit, right? And then they got credit, and then they just kind of go crazy. So I like to be able to, again, like I said, start young and explain to them going into it, right? I have children that all know what I do and just want to have conversations, want to attend classes with me, to listen in. And they all have excellent credit, right? Because they listen, and they apply, and they will call me and say, okay, I got a new credit card, it's only a $500 balance, so what do I have? I say, okay, you only have $250. Mentally, no, you only have $250 on that credit, right? And that's the way that you have to use credit, right? And if you can afford to pay, if you use it in a month, that's your gas card, even if it's not a gas card, right? That's what you use for gas, right? You didn't pay for gas before at one time with a credit card. You paid with it with cash. So any gas you get, put that money up. And watch your scores just go up. Fly, right?
So using it with a strategy. I like the gas that scenario. For like, I guess for another kind of, I guess, example from my life, right? Had a friend who actually got a credit limit increase, right? And he like projected it because he's like, oh, I don't want to add more credit. I'm like, dude, that's actually going to help you because that gives you higher utilization, right? And so those are things, just all the little credit tweaks I think that people need. And so I think knowing where to go. So talk a little bit more about that. How could somebody, if somebody has questions about credit, how can they come to you? You have programs, you have courses. What are some of the resources out there that you think somebody could go to learn credit? Let's say maybe homeownership is in the cards to them right now, right? Maybe they're fresh out of college or they're whatever scenario. They need to get that education, but they're not necessarily, going to get a loan. Like where should they go?
Right. So we do offer that type of education.
Okay.
We offer one-on-one courses with people
Okay.
that will enable them to understand before you even have credit to how to establish it and how to maintain it. And so I think it's better when when they can listen one-on-one versus reading a credit report.
Yeah.
It does for me. It starts with a credit report.
Okay.
And so I can see where they are now, right?
Yeah.
And then that will help me to kind of know what direction and what education that they need. Because some people, they kind of just get it, and they use their credit very sparingly, very responsibly. But I'm here to show the people that haven't used it how to get back. You can get back, and it's very important that once someone has ruined their credit pretty much, I show them how to take their time, and I let them know, be patient, because you did not, it did not take 3 months. They want to know, how about, should it take about 3 months for me to, did it take 3 months for you to get, for you to use up this credit? No, it did not, right? So I teach them that, you have to be patient and you have to stay on your course.
Okay.
And we do definitely have classes and courses that we do. We teach at first-time homebuyer seminars and stuff like that. And so usually those first-time homebuyer seminars are 8 hours. And so understanding your credit is actually 1 hour of that.
Yeah.
And so, we just kind of rip it apart.
Yeah.
Talk about credit scores, talk about how to be responsible. I literally have experiences, with this child or that one where something good happened, and then actually where something bad happened.
Yeah.
Talk, keeping it protected.
Yeah.
That's important too, and I think that might be a different conversation. But it's important, to kind of keep it protected and not walk around with your Social Security card. And I'm sure that's another conversation. But
absolutely.
It's just important, though, right, to keep it protected.
Fraud protection,
fraud
all those
protection,
kind of things.
right?
Yeah, which is why I think this episode is so meaningful and important. Because those HUD certified classes are pretty long, right? It's 8 hours, right? And so really, really wanted to create opportunity for people to get bite-sized information, right? We don't necessarily, we don't want to, bore them with an 8-hour podcast, but we can get you 20 or 30 minutes of really good information that's going to help you move the needle in your life. So I guess from this conversation, I've heard you say there really needs to start with checking your credits. You really, number one, need to kind of know where you're at, right? And so you've given us kind of the knowledge we need to know to do that. Where from there should they go, right? Obviously, they have the resources from Trustmark and some of the things you guys have. We at Avenue also have one-on-one pre-purchase counseling. So if you feel like, even if homeownership maybe is a year from now or 2 years from now, you can meet with our counselors and they will kind of help you understand your credit and what you need to do to be able to be mortgage ready or X, Y, and Z. So you have these resources in the community. Home Fest will be a great place. There'll be a ton of people there that can help you get where you need from a credit standpoint or help you understand your finances. Are there anything else you think they should do? Do you have any budgeting resources? Anything and this may be something interesting too, and we've talked about one of the biggest issues with affordability is the wage gap, right? Is not being able to make enough money to do the things, as housing increases, that gap. So what do you think about people getting side hustles and finding other ways to make more money? What are your kind of thoughts on some of those things?
So I'm gonna back up first and answer the question about how to help them as far as if they're thinking about
budgets,
building their credit and stuff like that. And so we teach them about debt ratio.
Okay.
And so it's important to know what a debt ratio is, and it's it's the amount of debt that you already have versus the income that you make. It's important to know that a bank looks at your gross income, and you don't bring home gross income. So you need to have some type of education on that, some type of inner discipline on that, because I'm qualifying you at 20% more income that you actually do not bring home. So that's important. Even on the credit cards, when they look at your debt to income ratio, it's based on the credit that you use, right? The amount of credit that you have, and the longevity of how long you've actually used credit. So with that being said, then it's important to be able to teach them what those three things are, and how to use those things to their benefit. Because when you haven't had any credit, but you're interested in establishing credit, then I go step by step, and I explain to them the 3 credit cards that you need. One bank, maybe a gas, and maybe a store.
Okay.
Right? And again, once you get it, whatever balance they give, I always say, in your mind, you only have half of that, right? And if you can use only what you can afford to pay off in the beginning, that starts off showing the discipline.
Okay.
That you need to be able to pay these credit cards, right?
Yeah.
Because again, then we have to go into interest and how much more. I show them, give me your latest statement if they have a card, right?
Yeah.
Let me show you, because it tells them, and people don't read those statements, but it will tell them right there.
Yeah.
If you keep making this $15 payment, how much more that you're going to actually pay for that tank of gas.
Yeah.
Right?
Yeah.
And so we are a resource, even our bankers are a resource for that one-on-one education. And then we outsource to people like Avenue, people in different nonprofits that help out with that type of education.
Got it. Okay. So good. And then, sorry, I know I asked you a double question there. So the second part of that question, in terms of, what can people do to improve their financial situations? Are there anything that you're recommending people do? Like, do you think, getting a side hustle is good? Maybe even we probably need to connect people with more resources into helping them improve their employment. You know what I mean? Being able to get a better job, or be able to improve your resume, those kind of things. So yeah.
And I appreciate that question because again, in today's where are we? Wherever we are, it's a shame, right?
Yeah, or you're talking about in terms of generations?
The generation, right?
Yeah, I think it might be Y
or whatever.
Yeah, beta, alpha, we're generation alpha, yeah.
Okay, and it's a shame because, because they just want to come home and get on a computer, that's really sad. So again, it's important that we teach the parents now to teach your kids as young as possible, give them something else, because again, the computer is not a babysitter. But it's horrible the way now that they're not really interested in working, and so now again, when we talk about generational wealth, we're gonna be held down because of the lack of education that we chose to give to our own children, our own families. Now is, like you said earlier, it's going to be left on one person, and that's very unfair, right? So we need to teach them earlier to get out, get a job, right? And something that they can do, nothing that will break their back or take away from school or anything like that, but just be out, right? Be able to be responsible enough, right? Teach them how to fill out a W-4, right? All that is so important. And then when they get a credit, know how important it is, and then when it's important to them, then they're going to treat it like that. And I just kind of feel like the younger that we start teaching them, and again, for me, it was 16, because at 16, I could start to put them as signers on my credit. Okay. Didn't give them a credit card, right? Yeah. But I showed it to them, right? And I let them see it. Now the oldest, again, she thought $2,000. How is a 15-year-old spending $2,000 a month, right? 201, in fact, right? But I mean 200. I'm so sorry. But spending $200 a month, right? But so I didn't know how to educate at that point. But I had to learn, and I had to learn the importance of and why it's going to affect all of us later on in life. Yeah. Because whereas I can help my mom out, my oldest cannot, right? She cannot help me out if I need to fall back, right? Yeah. And so that's really, really important. And so yes, to help them early on to get a job, not just go home and veg and get on the phone and get on the computer, but to do something that so you can help your family too. that's ahead of you, and for the generation to come.
Yeah, that's so
Right?
good.
Yeah.
Yeah. Okay. Well, this has been so impactful, and I think there's so much more to get into when it comes to this credit, and I'm sure we could spend hours, but I think we've given people some really great resources.
Yes.
So how can someone, if they have more questions, how can they get a hold of you? I guess we can put links to some of the courses and resources that Trustmark has. We can put those in the description. But yeah, how can someone get a hold of you?
Right. So I'm very easy to get a hold of. I'm never not available.
Yeah.
For the most part, but for Trustmark, I'm at M Davis at trustmark.com.
Okay.
And then my cell phone number. Do you mind if I give that out?
Yeah, if you don't mind.
I don't mind at all.
Yeah.
And I can always be reached on my cell phone. It's better to start out with a text, but my cell phone number, I can be reached. It's my business cell.
Yeah.
And my phone number is 832-434-0171.
Okay.
And I'm
We'll put that in the
available.
description. Yeah.
And I'm available. I stay available even when someone closes. Our mortgage statements have my face, my email, and my phone number on it.
Yeah.
So I let my people know I'm never gone. I'm always going to be here.
Yeah.
And for the people that I come in contact with, I get questions all the time. I love the education part of this business, right? Of course, I like to close loans, of course, right? That's what I do for a living too.
Yeah.
But just to be able to educate and someone go in knowing what they're getting into and how to manage it, that's a blessing for me, for them to be able to know that.
Yeah.
And then some people come and, once I educate them on what to do, and when they follow it and actually come back and end up a homeowner, man, that's a great feeling.
Yeah,
absolutely. Yeah.
Well, I appreciate the passion that you do with your work, the care you have for people from a personal standpoint all the way to your clients, and then just showing up here, being able to educate. And so I appreciate you doing that, and excited for more stories to come.
Absolutely.
And looking forward to Home Fest. We'll be seeing you guys there, and
for sure.
being able to connect with people in person and stuff. So thank you guys for watching the episode today. Be sure to hit the subscribe button so that you don't miss any of our Promise to Place episodes. Give us a like and let us know if you like this episode so we know we should do more content like this. Other than that, we'll see you guys in the next episode.
All right.
Thanks.
Thank you.
Bye.